Welcome to Rising Tide Startups, where today's most exciting solopreneurs share their startup stories. They also deliver tangible strategies that they would implement personally if starting their business over today. Each episode is a startup masterclass. Make sure you take notes. Take it away, Kevin.
This is Kevin Pruitt with another episode of Rising Tide Startups, and my guest today is Elliott Holland Elliott, calling in all the way from hot Atlanta. Thanks for joining us today on Rising Tide.
Thanks for having me. I really appreciate it.
Hey, I'd love for you to share a little bit about Elliott Holland with our audience to get the ball rolling here.
Yeah, absolutely. So I'm a reformed engineer, strategy consultant that went to Harvard Business School and decided to get into the business of buying small and medium-sized businesses. I did it for other folks for a while, then I did it for myself, and now I'm participating as an advisor. So my core business, Guardian Due Diligence, which I started in 2017, is meant to help individual business buyers vet their businesses that they're acquiring before they purchase them, to be sure that the numbers actually come back consistent with how the business has been represented, and that people don't get into bad situations buying $1 million businesses that should be $10,000 businesses. So that's what I do.
So is it always on the buy side?
Yes, always on the buy side, and that's on purpose. The buy side is where I've lived. So sort of like some of the best NBA coaches are former players.
Mm-hmm.
I understand the buy side very well. And if you think about it, like I use analogies a lot. So like a car auction. So the auctioneer is amazing, right? But he's the guy who's the best at selling any asset for its highest price. I'm the guy who's got a used car lot that only wants to buy the cars that are 50% less than what I can sell them for. So that's where I live.
So that when you're talking to prospective buyers, is that kind of your value prop? Is that kind of the lead statement? I mean, if you're, we can just jump right into it. The elevator pitch. You know, you and I are getting on an elevator. We're going up 10 floors. You got about 45 seconds to kind of convince me. What's that elevator pitch?
Hey, Kevin, if you're looking to buy a business, it's very unlikely that you have 10 years experience in vetting small company messed up financials to understand if this business is really this $1 million asset or a $10,000 dud. What Guardian Due Diligence does is help you cut through all the financials, look through everything, reconcile bank statements, taxes, financials, working capital, inventory, and all the rest to give you a very clear picture of what the business you're buying actually is. And we answer the question, is the business that you have an offer to buy, is it worth what you're paying? And we do that from a financial, accounting, and operational lens, so that you turn $1 million into many millions, not $1 million into 10,000.
Now, is the transaction, from your perspective, is the transaction only a one-time transaction, or is there something built in that says, hey, if I buy a business and it just skyrockets, I mean, there's some, reward for the due diligence partner that got me into this great opportunity?
So it depends. Let's say for most people, it's just a transaction support, and some people do multiple deals, so we get to see each other a couple of times as a result. There's a couple of groups I'm working with that are sort of aggregating several business buyers, and so we may even do 8 deals a year. For people who I actually like, who I like the deals, who like me, I use the phrase, we like each other's gumbo. I try to negotiate some sort of upside arrangement for doing, fractional CFO things post-close and helping them get set up in the business in the right way. Typically, you're going to be inundated with more stuff than you have time to do in the first 6 months of an acquisition. And so I lend a helping hand to get a piece of the up.
I mean, it's amazing that I've done this for 3 years, and I've talked to people literally all over the world, like 25 plus countries. And every time I hear kind of their business, like transition story, their business startup story, it's like they can talk about what they did before. And, you mentioned I'm a reformed engineer.
Right.
It's interesting. How much of that do you actually use in the diligence process? I mean, do you see, your engineer brain kick in, your Harvard business brain kick in at the same time?
Yeah, I'm a pretty specialized and dangerous tool. I'm sort of like Liam Nelson in Taken.
Yeah.
I have a very particular set of skills.
I will find you.
Send me my daughter back. I'm dangerous because I can walk the shop floor and have done it before as a manufacturing engineer. I can wear some jeans and crawl up under something nasty and I'm not going to squirm. I can have conversations with people because I have to sell my services. So I have that sort of bedside manner. Um, and then the thing about engineering plus finance that's really cool is it's like numbers on numbers. I mean, it's just a relentless understanding of how numbers and equations work. So I think the engineering piece that I use the most, and this will be cool for your audience because I think all of us have something we used to do that
Mm-hmm.
if we bring it to bear in the thing we're doing now, will probably be better. Engineering was the hardest, like set time thing I've ever done in my life. Like the time I spent at Georgia Tech was like relentless in how much it beat me down. And so a lot of these diligence processes get into really detailed, long hour numbers. The other piece is that for those who have any understanding of financial statement analysis or just appreciate complex quantitative systems, an engineer will pick up on data trends quicker than most because we've seen more complex data trends than the average investment banker or straight finance person. Because I tell people all the time, finance is addition, subtraction, multiplication, and division primarily. Whereas engineering is like all kinds of three-dimensional
Mm-hmm.
analysis, integrations, permutations. And so I see a lot of things quicker as an engineer.
There's no doubt about it, and not only do you have an engineering background, I mean, you probably went to, if not the best, probably one of the top two engineering schools in the country, and so you didn't go to some directional D3 school and minor in engineering and major in classics or something like
Right,
that. So
right,
I mean, you bring something to the table for sure, something of value. And then you went to that little college up in Massachusetts called Harvard,
right.
that that little little JUCO up there that
Some people know about it. Yeah,
yeah, very few
we
people
play
know.
JUCO basketball
You heard of
and
that.
main level finance ball. Yeah.
That's right. Exactly. Exactly. I love it. So, and it is interesting because I do think that you would have kind of an analytic nature to you from engineering that you could bring to bear in this process. But so I'm really curious. I mean, I've interviewed other acquisition specialists before, and the question that always plagues me about this whole process is, how do you know the information you're looking at is correct? I mean,
Oh
are
yeah.
you're just looking at stuff that the seller's given you? How do you know the books aren't cooked? How do you know that these are really accurate, reflections of where the business is?
So Kevin, that's not only a great question, that's the fundamental question any buyer should ask. I don't even like dealing with buyers if they're not asking that question. And honestly, buyers who don't ask that question, A, lose a lot of money, but B, I tend to want to push them to someone else because the way that you know is you check primary data, almost like a historian. Like if I want to find out what's going on in South America, I don't call a guy in South America and ask him to tell me what's going on in South America. I fly to South America, I look at
Mm,
what's going on, I analyze the data myself, and I understand fundamentally what I saw and I can describe it. So when it comes to businesses, lots of data, and you run your own, I run my own, so we know how easy we can manipulate data if we wanted to. The things that I like about business acquisition and particularly around due diligence is certain data sets are pretty much always accurate. So for instance, taxes may be a low profit manifestation of a real business performance because you don't want to overpay Uncle Sam.
mm-hmm.
Financials may be an inflated version because you want to show somebody how grandiose your
That's
business
right.
is.
Look good for the shareholders.
Exactly. But I promise you, if you walk into a bank and put in $100 and say, "Hey, can you tell Elliott that $100 is 200?" They're not going to do that for anybody.
Yep.
And so my favorite set of data is the bank statements, just because they're accurate. If money came in, they're going to account for it. If money came out, they're going to account for it. You may say, "Hey, I did a 4 for 4 at Wendy's, and I shouldn't have. That isn't a real business expense. Add it back." I get it, but it's actually there for me to see.
Mm-hmm.
I don't have to guess what it is. Even checks, which are an archaic form of paying that some
Right.
people still do, most banks still have a copy of the check on their statements.
Mm-hmm.
And so Those are pretty accurate. The other thing is diligence is a process of triangulating data. So simple things in a business show up several different ways. So like revenue. Revenue is in your financials, revenue is the deposits in the bank, revenue is on your taxes, but revenue is also the aggregate of all your invoices. So as I start looking at different data sets, I'm able to triangulate that data. Same thing with like asset heavy businesses. So you might have 10 trucks on your balance sheet, in your financials. You may have the same thing in your taxes. But if you have 10 trucks, you're going to have 10 VIN numbers, 10
Mm-hmm.
maintenance records, and other things that help you triangulate. And so part of the process is, if you're good at it, which I've been doing this for over 10 years, you have a very conversation just like ours, back and forth, no pop quiz kind of thing. But you're asking the same question three or four different ways over the course of a day or two to really get to what the true answer is.
So are you spending? I'm assuming spending a lot of time on site. I mean, if I'm the seller, if I'm the business that wants to sell, I'm going to have Elliott in my back pocket for almost every day for weeks. And he's almost like he's auditing me. I mean, it really is an audit at the end of the day
That's what I call
of
it.
some
So
sort.
the
Yeah.
main report that we sell is called a quality of earnings, and the easiest way to describe it is an audit of a private company.
I mean, I do go back to the bank statement thing. I mean, the thing that struck me as you were talking is, when you said I can look at invoices, I can look at tax records, I can look at this, I can look at that. But the not only will the bank statement show me the actual amounts, of revenue, it also shows me cash flow. It
Yes.
shows me ins and outs, and
Yes.
and I when I'm looking at that versus if I'm just looking at invoices, I have no idea if they've been collected or not.
That's it. That's right.
You may have a ridiculous amount of uncollectible, of accounts receivable or whatever,
Yep.
weight just sitting there that you can't collect on.
That's
And it
right.
looks really good on the sales side. But if you look at my bank statement, if I say I sold $4 million and I got $10,000 in the bank, there's a story there that we need to dig into.
Yeah. I mean, absolutely. And it's just, again, you can't go into the bank and give them $100 and have them tell somebody else it's $200. And for anybody who has any understanding of accounting constructs, there's a lot of, I'm not going to call them games. There's a lot of things that are presented in a certain way so that they're comprehensible for Main Street investors, right?
Mm-hmm.
However, they're not cash. So you can't spend profit, you can't spend revenue, you can't spend net income. You can only spend cash.
Yep.
The bank talks about cash, not revenue, which goes through AR, gets collected and goes to cash.
Yep.
No, cash. So even situations where a lot of sellers, so one of the things about buying a business that makes it a bit more scary is, say we're on the street and I'm selling you, $100 pair of shoes, and I tell you that the shoes are actually worth $120. So I put $20 of extra sort of value on the things. And if you believe my sort of story, then you pay $20 extra. I gave you $20 extra in sort of story, and it's one for one. Because businesses are valued at a multiple of cash flow or EBITDA,
Mm-hmm.
then if I convince you that $100,000 of profit that isn't really there is there as the seller, I don't get $100,000, not one for one. I typically get 3 to 4 times that.
Yeah. Yeah.
And
And in
so
some,
people
in
have a
some, it's a higher
huge reason to
multiple.
tell a story.
Yeah. And depending on the industry, it could even be a higher multiple,
Oh
so for
gosh,
sure.
absolutely. And size of business and all the rest.
Mm-hmm.
It can be tough. And that's why it's important. I know a lot of people who are experts in their discipline, right? So like an engineer, a roofing guy, a steel dude, a digital marketer, right? And so when it comes to like the operation of the business, they're the expert. But very few folks who can dig through private business financials because they're messy, they're inaccurate. A lot of people are on personal expenses through them. So I think it's mission critical that you get somebody who understands them. And we
Mm-hmm.
compete a lot with CPAs, and they're great, I think, at understanding like historical numbers. But the benefit that you get with my business, Guardian Due Diligence, is you have a buy side deal guy who's done deals advising you on the numbers of the business. And so you're actually not buying last year's cash flow, you're buying next year's. And so a big part of our
That's a
work
great distinction.
is making sure that last year's EBITDA or cash flow, which you're paying a multiple of, is actually indicative of next year's, when you're probably kicking a seller out. You didn't put the management team's kids through college. You weren't the one to pay these people to get their mortgage paid off. And so thinking through some of the nuanced points that allow $1 million cash flow business last year to be $1 million cash flow business next year.
So, I mean, I can also see a much broadened value to your service. I mean, if you're just competing head to head with a CPA, they're just looking at the financials.
That's
They
it.
really aren't bringing a lot to the table from an operational standpoint, or from the culture standpoint, or a management, standpoint of the business. I mean, to me, you're looking at almost like a 360, evaluation.
That's it.
You're probably talking to the C-suite, you're talking to the managers, you're talking to the employees. I mean, this complete comprehensive, view of a business that's about to be bought. So, I mean, if I'm an elevator and you're pitching against a CPA, that's a pretty easy sell if I'm wanting to buy. I mean, if you have an opportunity to kind of explain the difference, in your service versus what a CPA would do. I mean, tell me, I mean, what's the close rate of just kind of a ballpark figure of people that you talk to versus people that actually, sign on your services?
It's probably between a quarter and a third, but a lot of
Pretty good.
things affect that.
Mm-hmm.
Oh, yeah, it is. And thank you for saying that, because sometimes you can forget. Um, Sometimes people like brand names, right? And the top 50 accounting firms in the nation, the top 100, the accounting firm your dad uses for contracts, the accounting firm that your lawyer likes, that probably gonna charge you a whole lot more for a whole lot less. But I understand sometimes, Guardian isn't the biggest brand name yet.
Yeah, I love
Um,
that yet.
yeah, I plan to grow the biggest diligence business for Main Street business buyers the world's ever seen. I'm on my way. The other thing that happens sometimes is people like being cheap, right? And
Mm-hmm.
so they want to put $1 million bet up, and they want, you know, $4,000 protection. You know what I mean? That's like going into a live war zone, with the guy that just learned how to be a security guard last week. And if you want to be cheap, hey, that's fine. You can execute deals without diligence, but it's crazy that people would sort of snark at such a small portion of $1 million bet. And then I think what happens, and I'm getting better at it, Kevin, is recognizing the people who are serious,
Right.
who understand the risk, who have a healthy appreciation of it, and who recognize this is more than just a financial decision. It has a huge component that's operational. And so you're right, connecting the operations to the financial piece, and also like the personal stuff. So for instance, if I were to buy your business, Kevin, your business is inextricably related to you. So
Mm-hmm.
I need to keep you around for a time. And
Right.
so sometimes I have to convince my clients, I know you want to get 78 pieces of data from the Kevins, right? But the only way your deal works is if Kevin likes you.
Mm.
So you need to be nicer to Kevin. And so there's sort of like people stuff that goes on here too, that wraps everything up to get a good deal.
Yeah, I mean, what's that old adage that talks about being penny wise and pound foolish,
Oh my
where you're
God.
going, I want to beat Kevin down so I can get the best possible price on the buy side, but now Kevin's mad at me. So, if he's going to, if it's in the contract, he's going to stick around for 18 months. He is going to be the worst employee we have.
That's it. I had a client call me last year, and it was crazy. US guy based in Africa buying a website business down in Texas. And he wanted to be cheap and lazy. He didn't want to look around for like his own advisors, and he wanted to pay the least. And so the seller has a representative, the sell side broker, and then the buyer is typically by themselves until they get a diligence team. So he said, "Hey, broker who works for the seller, who should I use for a lawyer? Hey, broker who who works for the seller, who
Wow.
should I use for an accountant? Hey, broker who works for the seller, what do you think I should pay for this business?" And so he was talking to me while he was doing this, and he finally said, "Hey, well, the broker said I should use, you know, ABC law firm and BBC accounting firm. And I just told him, I was like, hey, I may not get your business, I get this. But do you recognize that all the advisors you have are given to you by a person who gets paid a portion of the transaction value when you close? Nobody is actually incented to help you. Um, and I don't think he quite understood that until he flew from Africa to Texas. And you'll appreciate this. I think the seller thought he had a sucker, so he increased the purchase price 25% during the trip. And the guy came back and he's like, well, what do I do, Elliot? They're asking for 25% more. And Kevin, I didn't know what to tell him, but I'd probably raise the price 25% on you too.
Yeah, I mean, I love that. I thought you were going to say he landed, he went to the office, and in that office suite was the accounting firm, the lawyer. They were all sharing an office there. So, yeah, I mean,
They
they
were
got a
probably all
vested
high-fiving
interest.
each other after he left. Like, man,
Exactly. They're all
we
sitting around
find 100
laughing.
guys like this, we'll be set for life.
So I understand from a seller standpoint, I would want to give you the information that you're asking for, and hopefully it's going to be accurate. But are sellers ever reluctant to give you access to information as the buyer's broker?
Yeah, all the time, really. It is a trust walk. Um, can I use a G-rated dating analogy?
Absolutely. It's
It's
your show.
really like getting married, and it's very close in actual finality. In that, like I said, a successful deal means the seller actually still likes you at close and wants to help you grow their business, that they still know better at close than you do.
Yep.
So you show up and you an offer. Here's what I want to pay for your business, and they say yes or no. That's kind of like the first date,
Mm-hmm.
really. They don't know you, they don't trust you. Apparently, you have some money. You put together a 3-page legal thing that looks okay. I'll take your, $4 million offer for my $1 million cash flow business. Then you get into diligence, and there's this pause of like, A, most sellers don't have the data collected, and B, for a private business owner, one of the scariest things to do is to put your hard fought private information into this ecosystem protected by some 3-page legal non-disclosure agreement
Right.
that's being honored
That
by a
you
guy.
hope is going to work. Yeah.
Exactly.
Mm-hmm.
So customer data, profitability, all this kind of things. And so you have to sort of earn the seller's trust. Date 3,
Mm-hmm. Yep.
date 4. Do we like each other? Some data you don't get until late in diligence. Like a lot of sellers won't give their customer data until the end.
Mm-hmm.
Um, I've seen a lot of sellers, they'll be a little tricky. They won't say it, but they won't give you any data until you finish your accounting review.
Mm.
So until you connect that the EBITDA actually is representative, they'll slow play data. Then as you get further into the process, it's interesting because you become the money bag. So if I'm buying your business, Kevin, and we're into this 2 or 3 months, right? And you're looking at a $4 million payday, I have to sort of sometimes say, hey, for the first 2 months, I was really nice and patient, but I'm the one bringing $4 million for this business in a month or two.
Yep.
I need all the data today.
Yep.
And love you, respect you, and I know that you're an independent entrepreneur and you've done great, but I can't wait anymore.
Right.
And I think that's almost like the engagement, really,
Mm-hmm.
right? When you have to start trusting somebody past your comfort level, and then closing the deal feels like marriage, right?
Yep.
And so a lot of times sellers are slow on data. And the funny thing is, novice buyers, oh, this crazy seller, oh, this guy won't give me any data. Doesn't he know this? And doesn't he read that? And I tell people all the time, very smart people don't do things out of ignorance. You probably just don't understand all their motives. So we sometimes battle that. And I think part of it's being patient, right? And sometimes I send people an email with a single image of a Brinks truck. Just to remind them.
Just a reminder. Where's the piggy bank in this transaction?
That's right. There's a huge pot of gold at the end of this rainbow, but
Yep.
we got to dance during diligence.
And it's not just the kind of closing a client and then you go do your work and give them a report and it's done. I mean, you really have to coach buyers through the process, because this is probably the first time they've ever done it. Or if they have done, maybe they've done it one other time, but they probably didn't have a service like yours to go through the process. So it would be I mean, I've got to learn to trust you too, as the buyer. I've got to learn as
Yeah.
my agent, my broker in this process. I've got to trust you that when you tell me here, okay, these stages are normal. It's almost like a doctor, an OB doctor, walking a,
Right.
first time pregnant lady through the
Yes.
process. This is normal.
Yes.
Relax. The heartbeat's supposed
Yes.
to be 150.
Yes. If it gets to this level, we should talk right away. But under this, you're fine.
Exactly. Everything's fine right now. Here's the margin of error. So yeah, I love that.
And to be honest, Kevin, I'm an entrepreneur. This is still something I started 4 years ago. And so I'm expanding the service offerings into more of coaching. I started with the quality of earnings report because it's sort of the integral must do piece of work that most buyers do on en route to buying a business.
Mm-hmm.
But as I expand, there's going to be more of a coaching element because I get a lot of people who January 1, 2021, they decided they wanted to leave their corporate thing and buy a business, and they need like all 10 years of my experience in a palatable, digestible format. And so those services will be coming. The other thing I do around trust building, right now I'm doing a weekly office hours. It may turn to once every 2 weeks, but I give people the chance to just ask sort of whatever deal related questions they want to ask. And it's just an open forum, right? So it'll be 10, 15, sometimes 4 or 5 people.
Mm-hmm.
And I think it gives them a chance to ask real difficult, detailed, nuanced, bespoke questions and get honest answers. Because sometimes
Mm-hmm.
it's easier to say yes, no, because that gets people kind of done with their question. But for me, a lot of times it's, you know, detailed, nuanced, experience level coaching. And that's, I think, when people really get into a mode of, he knows a lot more about this than I do.
Yeah. Yeah. There's no doubt
I
that
think I
that
should
wouldn't take long with the conversation with you and I for me to
yeah.
come to that realization. So, yeah. Are you talking about clients that you're having these office hours with, or it's just kind of an open forum?
Right now it's an open forum because I realized that for a lot of my potential clients, they don't really know the risk that they're getting into. So like this past yesterday, so I did an office hours yesterday, and I tried something. I went through like a 30-page quality of earnings report, and Kevin, I couldn't get through half of it before they started. Forget that. I want to ask questions about this deal, that deal, the other deal, right? And I realized that for a lot of folks, they've sort of committed to the fact that they will probably have to trust the seller
Mm-hmm.
or trust the process and not have a major avenue to get um, accurate data through. And
Mm-hmm.
that's the way they're thinking about it. And so I have to sort of educate them that investing is not betting.
Mm.
People think it's a bet when you're outside of the investing game. Investing is buying 50 or a dollar for 50 cents. But you don't know if it's 50 cents or a dollar 50, right? Unless you do the work. So I try to give people the opportunity to come get a taste. Because I think a part of it is just me. If you don't like the way I speak, the tempo, the lens that I come from, then I may not be the best solution. But I enjoy the work that I do. So anyone can come to my website. You can actually go on my website, sign up for the weekly office hours, and ask a question either by text, or you can click a button and just say it into your computer, and that's it. So I try to make it easy.
So and you talked about you started 4 years ago. Give me an idea of what's the typical business size that you generally deal with, and if you want to get into it, kind of get into maybe what would be kind of a broad range, like a pricing structure. Like if I'm wanting to buy $1 million, what would I expect to pay in the process to have the full office suite of services that Guardian Diligence would bring to the table?
Sure. So most of the deals that I do are under $5 million because the SBA 7A program will lend you up to $5 million to any individual. And so most of the buyers I deal with are in that space. And I try to make it specific on the landing page on my website. People think I'm doing these huge deals. $5 million and below. A lot of my deal flow is there. And that's typically, so in the part of market where I work, the valuations are typically 3 to 5 times cash flow or
Hmm.
EBITDA, or what they call seller's discretionary earnings. And so, a $500,000 cash flow deal will go for about 1.5 million. As cash flow gets to about a million in size, typically the multiple is closer to four, so it'll be a $4 million
Hmm.
deal. Those are the kind of things that I'm doing, and typically helping everyday folks. Like I grew up in Ann Arbor, Michigan. I helped a guy in Chelsea, Michigan last year to close a deal. I help some kind of Wall Street guys that are working at firms that want to do their own deal outside of their kind of $1 billion investing thing. They want to do something that they own. And then a lot of guys that are like mid-career, like mid-30s, they're a marketing person or a salesperson or operations person in some industry, and they want to buy a business in that industry and kind of become their own boss. That's really where I live. And because Guardian is really the service provider I wish I had when I was a business buyer,
Hmm.
we do fixed fee engagements. So our quality of earnings that gets wrapped with our deal advisory services, that's $15,000. Then if you want a light version of our quality of earnings, that's somewhere between $11,000 and $12,000. So instead of doing 3 years historical, we'll do the trailing 12-month period in the last fiscal year, and we'll pull out some of the analysis to make it a bit more palatable for people. Um, and that's it. What's nice is I tell people, when you've done it as much as I do, you can sort of predict the workload. And so I can tell you, if you go to like a CPA firm, they're always saying, hey, I charge 150 an hour, my partner charges 200 an hour, my analyst charges 75. It's somewhere between X hours and Y, and you're somewhere between 15 and 35,000 bucks. And they used to frustrate me so much. I'm asking an accountant for a number, and they're giving me a range. Like, it just sets up from the beginning poorly. So we're fixed fee. You know what you're getting into. The other thing that's nice about us, we're all about transparency. So it's a 3 to 4 week process. Let's call it 4 weeks. What we do in the first week is we take all the numbers that we get from the data room and spread them out so you can sort of see what's going on. And really what we're doing is we're sort of screening for the top deal breakers that occur in deals. And so we'll evaluate and find 70 to 85% of deal breakers within the first week. And what that means is sort of day 8, you're either, hey, this is a bad deal, save your time. And I might have saved you 2 or 3 months of effort and a whole lot of money because you're not going to need a lawyer for this and all this kind of other stuff. Or, hey, 8 days in, you're comfortable that the main things have been knocked away. So now you can go talk to your lender, go talk to your lawyer, talk to your seller with more conviction, which helps you get deeper into the deal more quickly. Whereas a lot of my competition won't produce anything of value in their quality of earnings process for 3 weeks. And at that point, I know it's just a 2 week difference, but when you're in these like month to month sprints to close a deal, those 2 weeks can make a world of difference in terms of, like, do you turn on a $20,000 lawyer? Yes, no. Do you spend 35 hours with a lender? Yes, no. So
Yep.
so we help people get to the answer quicker.
I mean, at that stage, do you have an idea what the selling price is, and if there's any margin, any wiggle room in that? Because you can do all the diligence in the world, but if they're wanting to sell this business for 6 million, and I don't care, if there's no possible way you can get to a multiple to get to 6 million,
Yep.
this is, it's not going to be over 4 million. At what
Right.
point in that process do you understand that? I mean, do you know that before, almost like the first week, that, or where in the process would that light bulb come on?
So the beauty of the deal process around that is the letter of intent is sort of the agreement that the buyer makes with the seller. So I look at a bunch of deals. I like, ABC Manufacturing Company, 10 miles east of Atlanta. And I tell the owner, hey, you got $1 million cash flow business. I'm going to pay you 4 million. You're going to hold a seller's note of 25% of that. So $1 million, I'm going to pay you over 3 to 5 years after we close. The other 3/4 of the purchase price, if it's $1.4 million, so 3 million, I'm going to pay you at close. Here's the conditions. I need 6 months of your time to coach me. I'm expecting that your business maintains $1 million of cash flow. There's $200,000 of working capital in the business. I expect to buy the business with that. here's my offer. And at the time of the letter of intent, here's the trade. So you kind of know the price at letter of intent. Here's why. The seller signs that letter and says, yes, Elliott, I'll sell my business for $4 million in the structure you provided, subject to diligence. But what I get for that is the 90-day plus or minus exclusive right to buy the business.
Mm-hmm.
So nobody else can buy the business during that
Right. It's
time.
kind of like earnest money too, on top of like a house purchase type thing.
Yep. And there's earnest money component in some deals. I shy away from that only because I think both the buyer and the seller can walk away at any time. So I've
Mm-hmm.
often been asked by sellers to put some earnest money down. And I ask, is the seller going to put any earnest money down? Because if I spend my 3 months looking at the deal and the seller walks, which has happened, right? I've got real costs, real lawyers, real
Yeah.
accountants, real lender, egg on my face. And that guy goes back to running his $1 million business. So I sort of say, I'm not doing earnest because
Mm-hmm.
we both have that risk. But for accepting my offer, for me investing this time of diligence and this money of lawyers and accountants, what I get back is the 90 days of exclusivity. So I don't have to worry. If I get ABC Manufacturing Company to accept my letter, I don't have to worry about Kevin showing up, talking to the owner, and buying the business 45 days in. I get that time to evaluate.
Right. Right. Have you? I mean, in this crazy time we're all experiencing called COVID. I mean,
Right.
what have you seen? What's been the effect on your business or kind of the industry as a whole, the business acquisition industry? Um, is it? Have you seen an uptick? You seen a downtick? Is it about pretty steady? I mean, what have you seen in the last
Great
12 months?
question. So let's call the beginning of COVID March 1, 2020. You can kind of debate that. Um, for like 4 or 5 months, it was like tumbleweeds, dude, just nothing.
Crickets.
Yeah, exactly. And that was tough for I think anybody who's providing services to that infrastructure or that ecosystem rather. And so around August, September, things started picking back up because I think it's like, hey, this is our new normal.
Mm-hmm.
We have to figure it out. And so some businesses took a hit, and so they may be available for a lower price. Some businesses stayed steady or grew, and they probably traded at a higher multiple than they would have because some of the market didn't do as well. Then I think January 1, I think everybody went home, had their, Thanksgiving turkey. They did the New Year's thing. And 2021, I think for a lot of folks is we got to go make hay when the sun shines.
Mm.
So the volume seems to be back. I think we're dealing with how do you account for PPP loans in
Mm-hmm.
a multiple of cash flow world? How do you deal with companies that took a hit for a little bit of 2020 but are coming back? And so
Mm-hmm.
their trailing 12 months may not be as strong as it has been historically, but you expect their next 12 months to be stronger. And then some deals, people are having to take a bit of a flyer, right? In terms of, I think this industry is great. Right now it's down. So if I have the cash to invest and sort of I can wait 3 to 5 years to kind of see the full benefit of my investment, then I can do stuff like, hospitality I think is coming back, or
Yeah.
restaurants that are
Travel.
coming
Yeah.
back.
Is it a, I mean, you would think it's almost a buyer's market because there are so many businesses that may have had a really tough last 12 months, but there's also so much cash available
Yes.
because there's so little to actually invest in that has any rate of return at all. So
Yes.
that it's like those two market forces are kind of competing against each other. So, to kind of keep that equilibrium, a little bit in the market. But have you seen, I mean, is it a buyer's market right now?
I would say it's more a seller's market. So the growth of buyers, I think due to the democratization of, private equity, which is sort of the
Mm-hmm.
industry of buying businesses, has become and created way more buyers relative to a couple years ago. So there's still way
Yeah.
more sellers than buyers. But in terms of compared to expectations that may have been set 5 years ago, there's way more buyers in the market. And so therefore buyers are competing for the same deals. Um, I think a strong business is going to fetch what we call a healthy fee, a multiple that a buyer will have to struggle to pay.
Right. But
And then
interest rates are
businesses
lower
that are
too.
struggling. Say it
So
again.
the interest rates are lower too. It's like you can buy more
Interest
house
rates
now because of
lower.
interest rates being so low.
CARES Act made the SBA loan program more favorable. Now you can put some portion of 10% down instead of 25% previously.
Mm.
Get a seller note, it can be less than 10%. Um, you know, it's interesting. The finding the right deal is so important. And then in my mind, the way that people make a lot of money in this industry of buying companies is sort of when you know an industry really well and you can see a diamond in the rough. I think you make a lot of money then. Or when you have a very specific thesis. So you're looking for a half bent paper clip that's copper, and you
Yep.
might be looking through a lot of stuff. And when you
Yep.
see that half bent paper clip that's copper, you go right away. You may outbid some other people because you know you can do stuff. The third way I see that is really strategic is a lot of people who are good at marketing or sales that will buy like an industrial company that probably does marketing and sales very old school,
Mm-hmm.
bring it to 2021 to that company, and they can grow those businesses really quick.
And it has been a pleasure chatting with you today because it's funny when I'll ask you certain questions. I almost see your eyes light up like you're going, man, now you are speaking my language. So
That's right.
you are speaking not, it's not the business side of Elliot. This is the heart. I have reached his heart, so it
This stuff
is,
matters to me, Patrick. You know, I tell people all the time, I run a business and I need to create fees, but the stuff that I do is prevent people from losing millions of dollars and going bankrupt. And like that matters to me. When I
yep.
see, every day, professional folks say, forget this day job, I'm going to go buy $1 million business, and they successfully do it. It warms my heart, and helping them do it is a labor of love. And I'm fortunate to be able to charge a fee for a labor of love.
And I have a feeling that the ones that buy businesses and are successful and they can see the benefit of using your services on the front end because it's sure paying dividends year after year, that you're building a tribe, you're building a community around you too of people that you worked with, and they're referring other people to you. And they're calling you getting Christmas cards from them and stuff like that. Just the whole idea of, hey, we're doing so well. I got 4 tickets to the Masters here, Elliot. I'd love you
Right.
to come along because I got to introduce you to some friends here on the there you go, on the 17th green here. But man, I just really appreciate you taking the time today. And as we've covered a lot of subjects, but is there one thing you kind of want to close us with that I haven't asked you about, and then make sure you kind of close us with letting people know where the best place to find you is?
Um, the thing around diligence that I didn't share in this podcast that I want to give people as they sort of start looking at things, um, have way more trust for documents to come directly from the system that they were derived in versus things that have been manipulated. So most
Hmm.
private business owners are going to be using QuickBooks for their financials. When you see financials that are in Excel, doctored, look pretty, made fit well on a single page, that's cute. But what I want to see is that funky standard QuickBooks header. And
Yep.
if I don't see that funky standard QuickBooks header, I'm very hesitant to believe the data. So that's a free one. If you guys want some others, you got to come to the website. So come find me at guardianduediligence.com, DUE for due on that. And then you can find me on LinkedIn, Elliott Holland, 2 L's, 2 T's, and Elliott. And you can also email me directly at eholland, that's Holland like the country, at guardianduediligence.com. And I'm very responsive. I'll say this, diligence can be a somewhat boring thing in some worlds. I also try to make this very exciting. So I think you'll enjoy working with me.
Well, there's no doubt if people, watch this on YouTube and they just see your passion, it comes through for sure. So I was looking on your LinkedIn profile. It said ETA. What's
Yes.
ETA stand for?
Entrepreneurship through acquisition.
Okay. So
So a
it's a
lot
whole
of the
buy
top
side.
business schools have created a curriculum around entrepreneurship through acquisition. So it's like a whole marketplace. It's really cool. It's a new name for something people have been doing for ages. So
Yep.
don't get caught up on that. But like, the business school folks, they know ETA. Like there's an ETA conference at MIT next week. There was one at Chicago Booth 2 weeks ago. Harvard had theirs in the fall. So if you want to learn more stuff about this industry as you get up to speed, I think the two things to search on Google would be ETA, entrepreneurship through acquisition, and then acquisition entrepreneurs are sort of what the people are called that are doing the buying.
And it's not just estimated time of arrival. It's
Right.
it's right. It
Right.
stands for something else. Although you will deliver if you
I
if
will
you
deliver on time.
you will
Yes, the
deliver on-
estimated time will be the delivery time, but that's not what we're talking about.
Exactly. Elliott, man, I appreciate your time today. I carving some space out on a Saturday morning to chat with us, and really appreciate that. And just thanks again for all you do and for really playing your part in helping all boats rise in a rising tide. Elliott, have a great weekend.
Have a great weekend too, Kevin. Thank you for having me.
Another episode in the books. We hope you heard some great takeaways. Don't forget to subscribe and leave a 5-star review on iTunes and YouTube. As always, thanks for listening to Rising Tide.